air. Walter, what's your question or comment?
Hey.
Hello, Walter.
How you doing? I just want to say hello to your panel. Ernesto Borges, sir, I've seen you from time to time, and I heard that you are with Bill Busters or something like that, I think, if I'm not mistaken. I have a program called Project Second Chance, which basically is trying to capitalize or use the housing foreclosure situation or either the abandoned properties in our communities to use as a way to bring jobs back to the community and to also get kids off the streets and give them a safe haven to train, get skills and life skills. It is a very great program which I'm trying to find a way to get around the banks and use these properties that are just everywhere in Inglewood and all of our areas where they're constantly keeping the value down because the banks will not let these properties be used in ways that it could be used, I guess, for the lack of a better word. Excuse me 1 second. You all
okay.
on the phone?
Thank you, Walter. I think Anessa can take it from there.
Yeah, I think it sounds like a great project you're working on. And give me a call if there's anything I can do to help you. Give me a call, and I'd be more than happy to discuss it with you. I have a radio show, as you may know, on WVON from 9 to 10 on Sunday mornings. You can call in, we can discuss it further.
Okay.
Yeah.
I do want to talk about another aspect, which is short sales. And John, you've written a book on short sales. Tell me what the advantages are of a short sale as opposed to waiting for it to go into foreclosure.
Well, a short sale is actually making a very bad problem less worse.
Okay.
So it's really your last stop before going to foreclosure. Now with the government, with these other programs, there's some other, the HAMP and the HAFA. But short sales have been 2-3 years ago. They were very difficult to do, very time consuming, very exhausting. They're actually getting better, but now the problem is finding buyers who qualify for loans to buy the property. And there's so much volume out there. So it takes a long time to do these short sales.
Okay, but if you try and do a short sale, can you stay in your home in the meantime?
Absolutely. You should always stay in your home if you can. Nobody can ask you to leave your house legally except a judge or a sheriff, if I'm correct, Counselor.
Pursuant to it.
Yeah. So
order of possession.
Absolutely. So you should always, stay in your house as long as the condition of the home is safe.
Mm-hmm.
One thing you said, Counselor, which is very interesting, is anything you're doing, whether it's a half program or a short sale, always in parallel will be the foreclosure. Banks are always going to be doing that foreclosure in parallel to all your efforts. So don't think for a second if you're doing a short sale or one of these other programs that foreclosure process is not ticking. It is moving forward.
I think one of the things that annoys people a lot is that maybe a house will go on foreclosure or a short sale and it will sell for relatively cheap. You can buy it in an auction, maybe a house that someone paid $250,000 for, you can now buy it for $50,000. And it's just kind of strange to a lot of people that you won't work with them to adjust their payments, but yet you'll turn around and sell that home for pretty much pennies.
That is totally, I could not agree with you more. We've had cases where $300,000-$400,000 houses would short for $115,000 to $150,000, and the banks would not allow the existing owner to stay there, even though they would qualify. They just want the new owner to get a loan. That's something that should be investigated. We don't know why that is.
Well, I think one of the reasons is, the federal government is complicit in this by the fact that they're insuring all of these loans. So it's not in the bank's interest if they're going to get 90 cents on the dollar if this thing goes under. Then they can go around, they get the insurance money from the federal government, they go ahead and sell the property for profit. So there's absolutely no incentive currently to refinance or modify these loans because of the actions of the federal government and the legislatures.
They have to go through the foreclosure process in order to get this money. They can sell, they're guaranteed, so they have more of an incentive to allow it to go into foreclosure than to try to work it out.
And that's a huge problem then.
Yeah, that's a really big problem.
I might just say this. A lot of times people talk about the banks won't loan money. The bank. and they speak of it almost in a very impersonal way, as if this is some brick and mortar, some structure here that won't do this. I mean, let's understand who owns these banks and who the shareholders are of these banks. And these are the very wealthy people. I mean, for the most part, they're the ones that make the decision, this upper crust 5% of the people that own these banks. These are the people that are hoarding the wealth of this country, that are directing their banks not to loan money. That's this upper crust here that's saying, oh, Chase, whoever, whatever bank you might mention, do not loan any money. We got our money back from the government,
Right.
and we've been made whole. Let's not take any more risk. We took a lot of risk, and God, I wish I could go gambling at Las Vegas and take all kinds of risk, and if I lose, you replenish my money.
Right.
And that's what they did, and now they've got their money back, and they don't want to loan it out to the public.
Right.
It's not just some brick and mortar. These are people. This upper crust of people who run this country, who run the banking industry, that will not loan any money. And then you say, let's tax these people a little bit more? Oh no, don't do that. Let's keep the money up here. So people need to understand what's going on here.
Yeah, I think part of the problem now is people are so frustrated with the banks that they're doing what's now known as a strategic default. Does anyone want to talk about that?
Well, strategic default, people are saying, look, I'll just live here as long as I can. I'm going to save up my money. I can't pay this. They won't lower the principal. Why doesn't the legislature push this lowering the principal so that people can afford, lower the principal, lower the interest rate, people could stay in their homes? But no, nobody's pushing to have this done. So people are saying the only thing I can do is let me take my $1,500 a month that I'm paying in my mortgage, put it in my pocket every month, so that in 10 months I'll have $10,000 or $15,000 that I can use to move into a new place. Maybe I'll have some money to put down on another place. Maybe I can at least get myself, rent a townhouse or a nice apartment. So they're just allowing the foreclosure process to proceed and pocketing the money they would normally be paying.
Right.
And it's not a bad strategy. If you know the outcome in the end, why try to beat your head against the wall?
Right. I know some people are basically, they've stopped making payments. They're saving up their money in the meantime.
That's right.
They probably sometimes, in some situations, they even have enough money to buy another home after
If
the
they can get
1 or 2
financing.
years. Exactly. Exactly.
Who would pay a mortgage, a $300,000 mortgage on a property worth $150,000? It's just bad business.
Right.
We've been taught that our credit score is our identity within our society, and people are recognizing the illusion of that now. I mean, that's a joke. So,
I do think credit scores matter, though, because credit scores are used for not only whether you're going to get a loan in the future, they're used for employment, they're used to set your insurance rates on auto and home and other things. So I think it's not quite accurate to say credit scores don't matter. If anything, they've impacted more parts of our lives than they did 10 years ago.
Okay, we'll be right back. I want to ask everyone to call in. It is a live call-in show. The number here is 312-738-1845. Please call in. The credit score, what exactly is the damage done to you in a foreclosure as far as credit? If you have, let's say you have an 800 credit score and your place goes into foreclosure, what happens to your credit?
Well, your credit's going to start going down. These lenders, creditors are reporting to the credit bureau every 30 days. So if you're late, it's going to be reported. If you're late on your utility bill, and they have this universal default that you don't pay your MasterCard and well.